Good afternoon, folks. What's poppin'? Alright, I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is pretty much the same as yesterday, except I am out of my IWM short. I'm no longer in my IWM short. Good riddance to a short. Who wants shorts? In this market, who wants shorts? All right. There's really not too much to talk about. Happy to give a quick overview on what the market did today. I'm also happy to be here all night answering questions if people have good questions. But this was like a really slow, grindy trading session. Yet we did finish up 0.6% here with the SPYs. The Qs are up 0.6%. And the IWM is down 0.5%. So we got what I was looking for today. We got some rotation out of the IWM because it had gotten super extended. Yet the other indexes and other stocks caught a little bit of a bid today, which basically enabled the S&P to make new all-time highs. Woo! It was a long day. It was a long day of watching paint dry. Yeah, new all-time highs in the S&P. All right, let's go. It was kind of a whimper that got us up there, but this is exactly what we've been looking for. I guess real quick, TLT down small, interest rates a little bit higher, and the dollar, flat green. But again, this is exactly what we've been calling for. Continuation of this bull market, breaking $600 in the market, getting to these new all-time highs. I don't think that this is stopping anytime soon. But it was a boring grind. I'm hoping that not every day is as boring as today was, but a grind is overall what I'm expecting. I've said a couple times, I'm not expecting renewed momentum like what we got post-election, but it does just make plenty of sense that when there's a boring day or volume's light or liquidity's light, that boring is bullish and we just continue to work our way up and grind higher. Popping over to the 5-minute chart, not much to talk about here. We had a decent sized gap up this morning. We consolidated for an hour. The 15-minute chart caught up, and then we just really went into this very, very slight upward channel for pretty much the rest of the day. But it gave us the close above $600. Popping over to the Qs. Was there anything different from the Qs? No. Qs are even more boring. Inside day today on the Qs. 5-minute price action on the Qs, very, very boring. Notably, let me just confirm that this is right. Notably, QQQE was down 1% today. So QQQE was actually pretty weak. Makes sense. The IWM was weak also. So QQQE, equal weighted Qs, was actually down a full percentage point today, whereas the Qs are up 0.6%. How's that possible? Well, it was kind of one of those Mag 7 days, right? Apple traded really well today. Apple's up a percentage point. Amazon was up 3% today. So Amazon was totally on fire. Google, not great, but finished up 0.8% on the day. Microsoft was on fire. Microsoft was up 2% on the day. Guess I can look at these charts over here. Really strong day from Microsoft. Really, really strong day from Amazon. Giving great follow-through from yesterday. Apple, great continuation on that break of 230. So it was a pretty concentrated day into some of these Mag 7 stocks that enabled the Qs to be decently green on a percentage basis, even though it's an inside day, while the equal-weighted NASDAQ was actually down a full percentage point. The SPYs were able to give some decent continuation. That was helped a little bit probably by the Dow. The Dow's been trading pretty strong. The Dow finished up 0.5% today. But wow, why am I blanking on what the equal-weighted S&P ETF is? I'm having a total mental blank on... Someone remind me what the S&P equal-weighted ETF is? My brain doesn't seem to want to work today. RSP, thank you. RSP... RSP was only up 0.1% with the SPYs up 0.6%. So, just very broadly, you can see that this was not like a great breath day. IWM down, QQQE down, SPYs just equalated S&P, barely green. But the SPYs and the Qs were able to be up a lot because you had Amazon up 3%, Microsoft up 2.25%, and Apple up a percentage point on the day. So that's what today was. Again, it was boring, but this is exactly what I'm looking for, is just upside continuation from this market. From a trading perspective today, I honestly did very little. I managed my swing positions like I always do. I took a short but somewhat aggressive Apple trade to the short side here. What got fully out. I started into this initial move. I added higher. I got fully out into the ADMA on the 5-minute. So that was a quick trade for a few dollars. I lost a little bit of money on a NVIDIA long. I probably either kept it slightly too tight or slightly too loose. I basically got stopped out at like 10:35. Actually, on this candle here, there was a small low that you can't even see in this chart that I decided to tighten my stop up to. Got shaken out of it, bounced a little bit. It would have broken that low anyway. So that's it. We had a couple companies that reported earnings here after the close. Dell is out and trading down. They have a third quarter net revenue that is missing estimates. So Dell's trading down a little bit. CrowdStrike's trading down. Or is it still trading down? Yeah, CrowdStrike's down. It looks like it's off of after hours lows though. Fourth quarter EPS outlook missed the estimate. The CrowdStrike numbers don't look bad to me, but CrowdStrike had a pretty impressive recovery into this report from the disaster it had this summer with the security issue that it had, and none of the airlines were able to work properly. It was able to fully negate that coming into this earnings report, which is actually pretty impressive. I'm not surprised at all to see CrowdStrike trading down, even on just like an okay report, when you consider just how far off lows this thing has gone since that event. We also have Workday out. Workday. Ooh, I thought this was trading higher. Oh, Workday down also. So yeah, Workday, CrowdStrike, Dell all seem to be trading lower here after hours. Oh, we have HPQ. Oh, HPQ, another one down. So all these names are trading a little bit lower after hours. I don't think any of this looks super significant. I know Dell's been a little bit in play ever since SMCI became a little bit of a disaster, so that might have some significance. I mean, Workday is always a little bit of an interesting company. I don't trade it that much just because I don't like these $200 stocks too much. So couple interesting ones, but nothing here I think that should derail a continuation of this rally. That's all that I've got. Again, like I said, I don't have much to talk about. It was a boring day. I traded very little today, and that was my game plan. I can say that I think a big part of successful trading is knowing when to trade aggressively and knowing when to trade more passively. Today was a day when, in the morning meeting, I just felt like there wasn't a lot of opportunity out there. A lot of the short opportunities that we were looking at yesterday because of extension, like the IWM, or like SoFi, or like Unity, or like AI, these names were well off their highs. You need to have that trade on already. Some of the longs we were looking at yesterday, like Amazon through 200, Apple long above 230, those worked yesterday as well. So for the most part, all the setups that we were able to identify yesterday worked, and then that means I don't want to be trading them today, unless I'm already in them still from yesterday. If you're already in them still from yesterday and you swung them and you want to continue to get paid, great. Otherwise, I don't like chasing day twos, so not a lot to do. That's all that I've got. I'm happy to answer any questions that anybody has. It's only 4:20 right now, so feel free to ask questions. First thing I'm seeing here is from Rex in the VTF. What do you think about Reddit failed breakout? Reddit's failed breakout under 140 with the $1.2 billion sales news on 11/21. So you never want to see a stock lose the low of like a positive Maribozu like this, because especially if it's on high volume, and the volume on that, considering the move, isn't massive, but it's obviously elevated. You never want to lose that because it means that everybody that bought on that day is out of the money. The stock had a massive run at that point, though. There was a ton of extension to the 21 EMA. So I don't like that if I'm a bull on Reddit, I don't like that it's back below 140. I also don't think it's the end of the world. I don't think it's the end of the world. Pulling back to the space between the 8 and 21 EMA. You can look at 130 to see if it's supported. The 21 EMA is down at 126. The next major pivot low beyond that's at 123. So you can look at those areas to see if it starts to build out a potentially viable pattern. I still like Reddit. I do think it got a little bit ahead of itself. I was super bullish on Reddit when it was $50, $60, $70. $150, I'm a little bit more cautious. But let the technicals be your guide. And for the moment, it's a little bit in the penalty box for losing 140, but it's by no means broken. So we'll see. From Bill, I am familiar with your trailing rules, but I find that I have a hard time giving back maximum P&L and trailing using pivots. Would there be any other suggestions you have for trailing rules or thoughts that might work better for shorter, scalpier trades, anything psychology-wise? So the problem, I guess, that you're having, you have a hard time giving back maximum P&L and trailing using pivots. So you struggle a little bit, if I'm reading this right, with the concept of something that I personally am sometimes too good at, risking the money that you've already made in order to make more. Meaning you're seeing the green on the screen, you like the green on the screen, you're up a decent amount of money, and you're saying to yourself, I want to keep this money. I don't want to risk, giving it down to that last pivot low or whatever. It's just too much potential that I'm giving back. It's a little bit tricky. Obviously, study your numbers overall, because just talking about it from a big picture, like macro account perspective for a second. The number one reason why traders are not successful in this business is because of a failure to manage risk. The secondary reason why traders, you pound here up a little bit. The secondary reason why traders struggle to be successful is because they limit their upside. So the first thing I would say to you is just, make sure you have a little bit of a study of your account, of those numbers. Are your upside days good enough compared to your downside days that you're, a good, consistently profitable trader? If the answer is yes, then you might not need to change that much. If the answer is no, then you definitely need to make some changes to really make sure that you're maximizing your P&L on trades, which, means that you need to risk giving back some money in order to make more. Sometimes traders have a habit of just like, as soon as they see any green on their screen, closing out positions. I don't think that that's your problem necessarily. I think that your issue that you're more working on is really maximizing P&L when you get those big moves. So that would be one thing to think about. Otherwise, it's a little bit tricky, because I think that in order to really trade right, you have to give it back to that last appropriate spot on the chart, which sometimes means giving back a decent amount of P&L. Where I don't like doing that is if you have a specific target. I've got my specific target at, whatever price, and I'm almost there. Then you don't want to give it all the way back to that last pivot low and risk giving back a ton of P&L. That's when I use like a risk-reward stop. You hear me talk about risk-reward stops sometimes. I used a risk-reward stop in the IWM on my short today, which ended up actually costing me a little bit of money. But, even though in this case it cost me a little bit of money, in the long run it's worth doing that. So my target on the trade was 140. I had a bid at 240. I had a bid at 240 and 1 cent to exit. It put in a low of 240.17. I'm trying to make an extra 16 cents. I'm short this stock still from 245 yesterday. I still had it yesterday, I should say, at 245. Am I willing to give it back $5 or $5 plus to make an extra 16 cents? Absolutely not. Am I willing to give it back even to the day high where the last major pivot high is at 241.50 to make an extra 16 cents? Maybe, maybe, but that's not a great risk reward either. It's not insane, but it's not a great risk reward either. So, what I decided to do at that moment in time is just utilize what I call a risk reward stop, which was, all right, it's trading at 240.17. That's the low right now. I'm trying to make an extra 16 cents. I'm not giving it all the way back to 245. I'm not even going to give it to today's high. I just put a buy stop, and albeit somewhat randomly, at 240.41. So, all right, I'll give back 24 cents to make an extra 16 cents. I'd still rather get filled on my bid, but I'm not going to give it like a massive amount of room. So that's what I did. I got stopped out in this little pop, and then it went down to my price anyway. So, you could say that I cost myself 40 cents on the trade, and I did. But I still think that that's a good way to make sure that you're not giving back all your P&L when you're just trying to make a little bit extra. But the problem comes when you're trying to make more than a little bit extra. When you're trying to make a lot of bit extra, then that oftentimes just really requires you to give it that appropriate room on the downside still in order to make a lot more. And I think that just means that you just kind of have to do it. For scalpier type trades, the concept of a risk reward stop makes more sense to me, because in a scalpier type of trade, you're almost by definition not trying to hold for that really big move. So then you maybe just want to trail tighter on a smaller time frame chart. Just trail. If you trail on a 5-minute chart, you're almost guaranteeing that you're going to get stopped out. But that trail sometimes can be really tight because it's on a 5-minute chart. Or you're using a risk reward stop, which is also going to inherently be really tight. And that just means either you get filled on your take profit spot, or you're getting stopped out and you're making money and you're out of the way. So I think that those concepts are better for those scalpier type of trades. But maximizing P&L, like I always say, the big money I think comes from big moves on big size. And in order to sometimes catch that, I think that you need to be willing to give back a lot in order to make a lot. And I don't have a good way around that doesn't require you to just not trade it properly anymore. And once you start trading things not properly, I find that it almost tends to be the best of both worlds. You'll end up giving back some money and getting stopped out of the position, probably even a little bit more than you wanted to, but you're getting stopped out and you're not actually there for the bigger move. So I feel like you need to just kind of trade it right in those circumstances where you're really trying to maximize your P&L, which means giving it back more room or not. And again, that doesn't necessarily apply to the scalpier type of trades. From Tate here, to add to Bill's question, risk reward stop on swings with daily targets. I don't use a risk reward on like a daily chart. My IWM short, just using this example, was a swing trade, right? It was from yesterday. But I'm not going to use a risk reward stop that's based on the daily chart. I'm just going to only use a risk reward stop when I'm close to that next take profit area, or I'm close to my absolute target, to make sure that I don't give it all the way back. I don't really do it, bigger picture on a daily chart. Yep, no problem. Thanks for the questions. From Apex Joy in the YouTube, now do you think that the MSTR near top is in? I don't know. So I had said, based on the daily chart, that my target on this was 340. It got to 340 today. So I still think that big picture, and I'm trying not to let my bias get in the way. My bias wants to say that I think MSTR is going to 0. And by the way, there is a chance that I think it does do that. But just from a technical perspective, it pulled back to 340. That was my real target on a more greedy short. It got to the 21 EMA. This chart's not broken. We haven't even broken this major 320 support. We haven't broken this major 280 support. We only pulled back to the 21 EMA on the daily chart. This could easily pivot back up from here and work its way higher. A lot of that probably will have to do with what Bitcoin does. Bitcoin continued its slide today, so it continued to pull back. But if you look at this Bitcoin daily chart, this does not look bearish either. This does not look broken either. So keep in mind that MSTR trades in a lot of ways as levered Bitcoin. So this MSTR chart, if this thing pivots back up at $51, then MSTR is probably going to pivot right back up as well. It could overshoot my 340 target too. It could retest that 320 pretty easily. So I still think it's inconclusive to say that MSTR has had like an actual real top. Now, granted, that move is so far away that it might be a little bit difficult to immediately get back above. What was this high on this day? 550 or whatever. But if Bitcoin breaks through $100,000, it will. If Donald Trump announces a Bitcoin Federal Reserve, it will. So I think it's still too inconclusive to say that this is an actual real top that came in this MSTR. The weekly chart right now is still just giving like an inside week. I guess it's not by a very, very small amount, but yeah, inconclusive, I think, Apex Joy. I do appreciate the question. There's nothing new that came out on Palantir, right? It's just a little 50-cent after-hours move for whatever reason, I'm assuming. Doesn't look like there's real new news, but if anybody sees new news on Palantir and can let me know, I would appreciate it. Just put it into the VTF. Otherwise, it looks like we got through everybody's questions. Again, it was a slow day, so quicker afternoon meeting today. I hope everybody did a good job not over trading, not forcing things. There were a few decent opportunities out there, a couple that I called out but didn't get involved in as well. So I hope by being selective and patient and not risking a ton even on those selective trades because none of them were A+, that traders were able to make a few dollars today. And probably similar price action tomorrow. We have a few, I think, important economic numbers in the morning, so the morning should trade well. But I would assume by midday tomorrow it's going to be really slow. We're not going to do an afternoon meeting tomorrow. We're not going to do an afternoon meeting on Friday. We'll 50-50 on a morning meeting on Friday. So anybody who's on the YouTube and not in the VTF, have a happy Thanksgiving. And everybody who's in the VTF, I'll see you tomorrow morning. Have a great night.